Greetings, I'm Shaun Pruitt, Zacks equity strategist, and today I'm going to be discussing whether investors should buy, hold, or take profits in AppLovin's stock near all-time highs. So AppLovin is a stock that's seen a very strong resurgence amid subdued tariff concerns in hopes of an interest rate cut. And attributed to bullish strategic moves, financial performance, and market momentum, the mobile app technology provider has seen its stock rebound and soar over 100% in the last 6 months. It is now up 80% year to date. And more astonishing, since going public in April of 2021, AppLovin's stock has now skyrocketed 800%, which you can see here, and it hit an all-time high of $613 a share in Wednesday's trading session, and actually has continued to hit new peaks in the last few trading sessions, hitting another all-time high of $632 today on Thursday. So it's certainly a worthy topic of whether investors should buy, hold, or take profits in APP, the ticker symbol for AppLovin stock. So AI ad dominance and international expansion is what's really adding to AppLovin's growth. So reigniting optimism for AppLovin stock has been the company's Exxon 2.0 platform, a machine learning engine for mobile and delivery that has been outperforming business expectations. So determining when and which ads to display and to whom, Exxon 2.0 optimizes advertisers' reach, engagement, and monetization, especially in the mobile and e-commerce sectors. And furthermore, AppLovin is fueling its growth by rolling out its ad tech globally, targeting markets in Europe and Asia with offices in Tokyo, Berlin, and Seoul. And most importantly, this international expansion has dramatically increased AppLovin's total addressable market and has reduced reliance on U.S. gaming revenue. And speaking to AppLovin's shift beyond gaming, it's noteworthy that AppLovin divested its mobile gaming division for $400 million in June to Triple Dot Studios, and also received a 20% equity consideration in Triple Dot at the time of closing. So the strategic move will allow AppLovin to streamline its operations and focus entirely on its high-growth ad tech platform. And to that point, AppLovin is positioned as the third largest ad platform provider in the U.S. behind Meta Platforms and Alphabet. So just discussing AppLovin's explosive financial growth. So AppLovin's high growth and ad tech platform is expected to bring in annual sales of around $5.5 billion this year, which would be a 17% increase from $4.71 billion last year. Even better is that fiscal 2026 sales are projected to climb another 26% to $6.93 billion. And echoing the excitement for AppLovin stock is that since the pandemic, its top line has stretched over 200%, with annual sales at $1.45 billion in 2020, which you can see here. So S&P 500 inclusion in analyst upgrades, which are other catalysts that's really igniting AppLovin stock right now. So further boosting investor sentiment and institutional credibility is that AppLovin stock will be added to the S&P 500 next Monday, September 22nd. And although AppLovin has blown past its average Zacks price target of $524.86 a share, which you can see here, it's noteworthy that several analysts have boosted their price targets for APP to over $640, and it almost came close to that mark today. But notably, this includes analysts at Benchmark, BTIG, and Wedbush, who have cited their bullish stance on AppLovin's AI-powered mobile ad tech platform. And most influential to the Zacks rank is the positive EPS revisions. So earnings estimate revisions are nicely up for AppLovin over the last 60 days for fiscal year 25 and fiscal year 26, and expecting high double-digit EPS growth for the foreseeable future. Fiscal year 25 revisions have risen 7% in the last 2 months, from $8.44 to $9.03, which you can see here. And fiscal year 26 EPS estimates have spiked 12%, from $12.07 to $13.55. So the bottom line is, although it may certainly be a good time to take profits in AppLovin stock if needed, the technology services innovator has continued to grow into what was a very lofty valuation in the past. So keeping this in mind, it wouldn't be surprising if there's still more upside and higher highs ahead for AppLovin stock, which currently sports a Zacks ranked #1 strong buy. Again, I'm Shaun Pruitt, Zacks equity strategist. I hope you enjoyed this content. For more, please feel free to visit Zacks.com/promo.